Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a crucial day given the fact that we have quite a few data to digest. US GDP figures were revised to 5.2% yesterday. We have the India GDP figures expected today, and of course we have the poll predictions. The exit poll predictions for the assembly polls as well that the markets will be digesting tomorrow. But it's an it's F&O expiry as well. November series looks like we are poised to end the November series above that 20,000 mark. And of course, lots of stocks in focus today, including the likes of Eicher Motors, Thomas Cook India. We will be taking stock of all those stocks, and we will also be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, as usual, send them in to us, and we will try and take them up today. But before we go any further, let's take a look at the top headlines at this hour. Wall Street ends mixed even as US GDP growth for the third quarter is revised higher to 5.2% from 4.9%. Stocks are poised to clock their best monthly gains since July 2022. Meanwhile, Asian markets are trending lower in early trade, with the GIFT Nifty hinting at a flat to negative start for the Indian market. Crude prices rise with the Brent trading above that $81 a barrel mark ahead of the OPEC Plus meeting. Oil-producing nations are slated to discuss production cuts today. Meanwhile, supply disruptions in the Black Sea also aid the upmove in oil prices. Tata Technologies, the first Tata Group IPO in 2 decades, will list on the exchanges today. The issue was subscribed over 69 times, receiving a record 73 lakh plus applications, higher than the LIC IPO that opened in May 2022. 2 more listings to watch out for today: Federal Bank's NBFC arm Fedbank Financial and Gandhar Oil Refinery. Among stocks in focus, watch out for Thomas Cook as promoter will offload 8.5% stake via an OFS. Offer for sale that is also in focus will be Metro Brands and Nykaa as Foot Locker Inc.'s deal with the two for its India foray. India's second quarter GDP will be announced later this evening. Economists predict growth of anywhere between 6.8 to 7.2%. It is likely to exceed the RBI's forecast of 6.5% in the second quarter. And all eyes on the exit poll predictions. The exit polls are likely to give indications of the election outcome and its impact on the crucial general election in 2024. Well, those were the top stories at this hour, but let's shift focus to market technicals then. Let me bring on board, our technical expert for today, Ajit Mishra, who's the Senior VP Technical Research at Religare Broking, joining in this morning. Great to have you on the show, Ajit. We have managed to reclaim that 20,000 mark after 47 sessions, and, we were somewhere around 20,100 mark or thereabouts. You can say that the countdown has started, to hit a fresh high, because we are just about 100 to 150 points away from lifetime highs, right? But given the fact that 20,000 is kind of holding on, do you expect F&O series or the monthly expiry to take place somewhere around this mark? Do you think today we will manage to sustain these levels, or do you think there could be some fatigue and we could see some bit of a correction today?
Yeah, good morning, Nandita. So, Nandita, yes, we have reclaimed 20,000 mark. We are inching towards the record highs. And if you have noticed that in the last 2 months, being a roller coaster ride means if you see that from the record highs around 20,200 mark to roughly around 18,800 mark, and just in a month's time, we have recovered to those levels. So now we feel that this record high is just a formality, considering the kind of quantum that we are seeing in the banking index after a prolonged underperformance. And there could be a beater around 20,200 mark, which also coincides with the record high, being the monthly expiry. But positionally, we are eyeing 20,500 levels in the index in days to come. So it's a buy and dip market. Now 19,800, 700 is the area wherein we have multiple supports to look at, which was earlier acting as a resistance. So one should continue with buy and dips approach, with the 20,500 being the positional target.
All right, those are the levels to watch out for on the index. With that, Ajit, hold that thought. We'll come back and talk about specific stocks and take up some viewer queries as well. But let me also bring on board Deepak Jasani, who's the head retail research at HDFC Securities, joining in. Great to have you on the show, Deepak. As I was talking to Ajit about this 20,000 back on the index, would you say that this, after a roller coaster ride, as Ajit was mentioning, we have, kind of reclaimed those 20,000 levels and heading towards fresh highs? Do you think this is just the start of another leg of up move? And, also Nifty Bank has started participating. We've seen 4 consecutive days of, up move coming in there. Do you think there are signs of reversal in the Nifty Bank index as well? And the underperformance that we've seen could be reversed here on?
Good morning, Nandita and the viewers. Now, we are basically, once the exit poll and the election results are out on Sunday, the markets will then review as to how the backdrop to the general elections will look like. Although the voting in the state elections and general elections need not be similar. But anyway, if the outcome of the state elections is below expectations of people, then we could see some sort of a sell-off, a minor correction, because we haven't seen any major correction in the whole up move. The correction or the profit taking could start from today itself. That is what we feel, given the fact that there are so many events lined up. And today, tomorrow, position unwinding could happen. And Monday, depending on the outcome, either we could open gap down or gap up and then take it forward from there. But I think once the uncertainty is out, people will come back to the market to buy, to bottom fish at lower levels, because broadly the India story is still alive.
All right, the India story is still alive. Till now we have seen mid caps and small caps outperform. In fact, even this month, mid and small cap indices have outperformed the benchmarks and are up somewhere around 10% or thereabouts. But do you think now the valuations, are pretty much stretched? And, yesterday we saw a lot of these large cap names participating in the rally. Do you think, the up move, if there is an up move, it could be now driven by the large caps?
A lot will depend on where is the fund flow coming from. In case the fund flow is coming from FPIs, which we are seeing for the last 3 or 4 sessions, then the activity will be concentrated more in large cap and the larger mid caps rather than the small and mid caps. But if FPIs are not present in a big way, then probably the locals, the traders, the HNIs will drive the market, and then there we could see mid caps and small caps outperforming. So a lot will depend on the source of the flows.
All right. We saw dollar index. In fact, dollar has cooled off quite a bit. It was just recently somewhere around that 3-month low. Do you think metals as a pack will do well? Of course, this comes as a tailwind for this particular sector, and oil and gas as well. We've seen quite a few tailwinds emerge there. Earnings have been pretty good, and going forward, given the energy transition roadmap, OMCs will be in focus particularly. So do you think energy and metals is where we could expect some leadership sectorally?
Yeah, there could be tactical shift to these sectors for the interim. Now, for metals, we need the Chinese economy to revive in a big way. Today's PMI numbers are not very encouraging from China. So in that sense, we may have to wait a little bit more for some more signals from China for the metal sector to sort of start running up. Oil and gas, I think a few brokerages have turned positive on oil and gas, and there is a record date in one of the OMCs. So there may be some temporarily tactical buys in the pack. Now, the fuel price, when they will be revised, and to what extent is the crucial point for marketing margins among the OMCs. So that will have to be crucially watched.
Right, I want to get your thoughts on the Tata group of shares. Titan recently hit that 3 lakh crore rupee market cap mark, and of course Tata Motors has been on an upward trajectory, and of course we have Tata Technologies as well listing today. So going forward, how would you approach the Tata group of stocks now? Most of these stocks are hitting fresh highs.
Yeah, the group has sort of done well, except the IT side. They have done well now. They are largely in cyclical space, and the cyclical space has done quite well, except for Titan and maybe Trent, which is not in the cyclical space. The group has been doing well, is in the news for the right reasons. I think there may be some more upside for the stocks within the group.
All right. And lastly, gold loan firms have, been on an uptrend. And yesterday we saw gold prices hit a fresh high. But there were concerns of heightened competition from banks, especially after RBI's crackdown on consumer loans. Do you think, that would actually not be such a big threat for these gold loan firms? And perhaps one should look at these stocks as an investment theme?
Yeah, one of the gold finance companies has mentioned that with the general revival in the credit growth and the demand for credit from businesses, the bank's focus on gold loans has reduced recently. So in that sense, I think the threat of bank competition for gold loan companies may not be so large.
All right. One last question then on the entire two-wheeler space. Hero Moto has been in an uptrend. Eicher Motors not so much, but we have a very positive report coming in from Jefferies on this particular stock. It says that the competition concerns may have been overdone, and there's a buy call on this particular stock. Target price at 4,650, and in fact Jefferies sees a potential for re-rating, and it has also mentioned the Enfield's annual biking festival that's taking place in Goa as to how it is reinstating confidence in the brand appeal of Eicher. But in the entire premium two-wheeler space, do you think competition concerns were actually overstated when it comes to an Eicher, or do you think a Bajaj or Hero could wrench some market share from the Enfield maker?
Yeah, I think the demand for premium goods, consumer goods or consumer durables or automobiles is on the up. That is what we have been seeing over the last few months. And as this company is into premium motorbikes, I think the overall market pie is going to increase. There may be some changes in market share here and there from month to month, but overall, as the overall market will still grow, I think that the fear of competition denting their sales growth may be unfounded for the time being.
All right, that's the view then. Fear of heightened competition may have been overdone when it comes to Eicher Motors. With that, Deepak, thanks a lot for taking out time and sharing your thoughts this morning. It was a pleasure chatting with you. Well, with that, let's focus in on some of the stocks that are, in focus this morning. Thomas Cook India, this would be the stock of the day, given the fact that promoters are looking to sell somewhere around 8.5% stake via an offer for sale. And if you look at the share, the floor price that has been set at 125 rupees per share. Right now, Thomas Cook is at somewhere around 157 rupees or thereabouts. Stock has not really done well in the last 5 sessions, but the gains may have fizzled out because on the monthly charts it has gained somewhere around 17% or thereabouts. Do you think any dip should be utilized to get into this counter? Ajit, what are your thoughts?
The stock overall has been doing well. In fact, if you have noticed that in the last like 7-8 months, the stock has almost tripled from roughly around 50 to 165 levels. So it's a normal dip in case if we see any kind of action towards 125, 130 levels. So that's the area definitely can be considered as a buying opportunity. And being a trader, your stop should be at place. So I feel that maybe close to around 110 should be your stop if somebody gets the dip closer to around 125. And in case of just one time event when we just see a dip and the stock recovers, then one should wait for some consolidation. Means it should spend some time around the current levels before marching further upward. So any dips toward 125, 130, it's a good level to buy. But unless we see such kind of a decline, then one should avoid.
All right, that's the view on Thomas Cook then. But, Nykaa, this stock has done well over the last 1 month. It has picked up steam. even though I think on a one-year basis, it isn't really close to what a Zomato may have done. But last 1 month or thereabouts, it has managed to pick up steam. And of course, there is news flow that Foot Locker is looking to make its India foray via, Metro Brands as well as Nykaa. So on the charts, do you see more up move for Nykaa, perhaps a dash at that 200 level?
Yes, in fact, the kind of price action that we have witnessed in this stock in last 10, 11 months, it's a kind of an indication that we are seeing reversal. So it's too early to say that yes, it's a long-term reversal, but short-term, it's clearly in place. 160 was the area basically where we had the previous hurdle, and we've decisively surpassed that mark, and we are holding up the same level as well. So yes, 200 is something that one can definitely target, and the stock should not slip below 160 mark again. So that should be a stop. So one can initiate long around the current level also with strict stop at 160.
All right, you can look at initiating longs in Nykaa. 160 stop loss and 200 on the higher side is what you can expect. But let's talk about an IDBI bank. There is news flow that the government has initiated fresh bids from the asset valuers of IDBI bank. I mean, initially there were reports that the divestment of IDBI bank may be shifted to the next fiscal, and because of that, I think we saw some bit of weakness coming in on the charts as well. But particularly today, do you think we could see a revival of an up move, and perhaps 52-week highs of 75 or thereabouts could be retested in the next couple of sessions at least?
It's too optimistic, Nandita, considering because we have multiple hurdles to cross. So 64, 66 is something that we are closely eyeing. And though the banking index has reversed, it didn't participate much in the recent move yet. So we feel that from the short-term trading perspective, at least, let the stock surpass 66 mark. Then definitely one can look for long position. Otherwise, stock like Axis, ICICI, Federal Bank, these are the better candidates to look at.
All right, that's the view on IDBI Bank. But let's take up some viewer queries that are trickling in this morning then. The first one is coming in from Raja Pasala. Wants to know your thoughts on a Hindustan copper. And he wants to know both the short and long-term views, whether he should hold on for more time or should he exit at the current level. He's not really given me his buy price. So if you look at the charts, last 1 month 20%, and last 6 months 50%. Do you think one should actually take profits at the current juncture, or do you think partial profit is something one should look at?
In fact, Nandita, we have recommended this to our clients as a disclosure, and we are eyeing roughly around 188 to 190 levels. So one should definitely hold if the view is short term, and your stop should be at 162 for the short term position. Positionally also, like for medium to long term also, the chart pattern indicates potential reversal, long-term reversal, which could help the stock to inch toward 250, 270 levels, in a months to come. So in both scenarios, one should definitely hold, yes, as a very long-term investor means for a year or two, then the stock should not breach this level of, 100, 105 now. So these are the levels that should definitely hold. So in both the scenarios, and hold.
All right, that's the view. Hope that answers your query. But the next query is coming in from Nitin Limai. Wants to know your thoughts on a Poonawalla Finance. In fact, Poonawalla FinCorp. Stock was up 6% yesterday. Looks poised to hit that 400 mark pretty soon. What would you advise investors to do? Should they look at fresh entry, and if somebody holds it, should they continue to hold, or do you see the need to perhaps use these rallies to book some profits at least?
See, if your view is short term, then definitely you can still look for fresh longs, considering the overall trend the stock has been trading in, and we are witnessing noticeable traction. Means the volume have also witnessed a noticeable uptick in the recent days. So this indicates there could be fresh momentum in line with what we are seeing in the other NBFC counters. So 400, yes, is going to be the first hurdle, and then maybe closer to around 415 to 420 levels. And for the existing position or for fresh trade, your stop should be at 370.
Right, that's the view. I hope that answers your query. The next query is coming in on a Tata Chemicals. And this one is coming in from Karthi M. wants to know your thoughts on this particular stock. This stock has literally done nothing over the last 6 months. Do you see any movement going forward, or how should one approach this? Is there a trade here, or given the fact that it has been pretty much range bound, one should avoid this at the current juncture?
Yeah, that's right. In fact, we have hardly seen any move. The stock has been hovering in this band, with 900 being the lower band and 1050, 1100 the upper band. So we are currently trading through the lower band, but if the view is short term, I feel that it's prudent to wait for a break above 1000 mark for any fresh momentum, and then for the level of around 1060 to 1100 mark could be the potential target. And for the existing position, 940 should be the strict stop now, because below that it might trigger a fresh level of down move.
All right, those are the levels to watch out for on a Tata Chem. The next query is coming in on a Strides Pharma. This one is coming in from Hemant Kumar, wants to understand how should one trade into this counter. I think the stock, even this stock, hasn't done much over the last 1 month. I think the rally that we've seen over the last 6 months has kind of fizzled out a little. But from the pharma basket at the current juncture, do you think this stock warrants a look, or do you think one should look at larger plays like a Cipla or perhaps Dr. Reddy's?
So yeah, that's right. In fact, Ananta, I always recommend then when it comes to short term, your position should be aligned to what we are seeing, in the benchmark. In case if they are not aligned to that move, one should avoid, because we are here chasing momentum when it comes to short term. And this stock is definitely not in that category as of now, though we've seen a very sharp reversal recovery in the last 4-5 months, but from last 1 month, the kind of breather that we are seeing in the stock, it might consolidate further, with 510, 520 being the upper band and 460, 65 being the lower band. So for very short term, is definitely an avoid. And among these names from the pharma space, Granules and Divis Lab, these are the best candidates that one can look at.
All right, look at the names that Ajit mentioned from the pharma pack. But, let's take up a query on the OMC pack, which has been a buzz of late. KRK Rao wants to know your thoughts on IOC, BPCL, HPCL, also an MRPL for that matter. But in the entire oil and gas space, would you stick to OMCs like HPCL, BPCL now, given the fact that most of these shares have been hitting 52-week highs?
In fact, I feel it's the beginning, Nandita, considering that almost like nearly 4-5 years of consolidation that we have witnessed in these names, the OMC counters, and now we are seeing the stock reclaiming the record highs. So after such a strong move, like for example, IOC is up roughly around 27% in this month so far. So there could be a bit of a breather, so if the view is very short term, again, OMC is something that one should definitely avoid, because we have hardly seen any consolidation in the entire move. But if your view is medium to long term, definitely one should look at, accumulating these names on any dip. So like for IOC, any range around 95 to 100 to 105 zone is a good buying area to look at. And now I believe that this zone close to around 85 should act as a, major support. And upside is open because the stock is trading at the record high, and we have a similar view in HPCL and BPCL. MRPL, on the other hand, I feel that in case if you have a position, you should book at least partially, because we have reached to the previous swing high, which was around 127 mark in the June 2022. So the volumes have also dried, so there is a possibility of a profit taking in days to come.
All right, possibility of profit taking when it comes to the OMC basket. But last query really for the day. Funny PG wants to understand your thoughts on a GSFC, whether it's the right time to buy this stock. There are signs of a rebound. When you look at the monthly charts, hasn't done all that well, but off late it's attempting at a rebound. Do you think one should look at it now for a fresh entry?
So GSFC, yes, we are seeing a bit of a breather, but the stock is still holding above the short-term averages. So that gives us the comfort of, the positive tone is intact. But one should be very strict with the stop losses because it's a high beta counter. And for the fresh trade or existing position, your strict stop should be at 180. And in the next swing, maybe close to around 204, 205 should be your immediate target area.
All right, that's the view on GSFC. But I want to just squeeze in one last query on a Minda corp. Ajit, this stock was up 11% yesterday. And we have a query from Rupak Mehta, wants to know whether one should use this opportunity to cash out. What would you advise?
No, in fact, they should put in because the stock is still trading around the record highs. The last trading session, the stock was up around 11% with almost 5 times of the average volume. So this indicates that the strong hands are still in control, and now you should have a trailing stop loss in place. So maybe close to around 355 should be the area where one can place the trailing stop, and positionally for 410, 420 they can stay put.
All right, that's the view on Minda Corp. Stay put, that's the call. But with that, we've come to the end of the query segment. But Ajit, before I let you go, what are you flagging off for viewers this morning in terms of stock recommendations?
So, Nandita, since we are outrightly bullish on market, considering the participation from across sectors, we have 3 buy recommendations for the day. The first one on the list, we have Apollo Tyres. So, tire stocks, we are again seeing buzzing, and Apollo Tyres, after the marginal retracement, it looks set for a recovery. So 445 is what we are eyeing in Apollo Tyres. So with stop at 415, one can go long in Apollo. HUL, it didn't participate much. In fact, if you talk about the FMCG basket, it's slightly on the back foot. And since now we are seeing rotational buying across sector, they should also witness some traction now. So 2595 is what we are eyeing in HUL. 2490 should be a stop in this position. And lastly on the list, again from the underperforming pack, but we expect recovery, Infosys from the IT majors. 1540 is what we are eyeing after this consolidation that we are seeing in the stock, and 1420 should be a stop for this position.
All right, 3 recommendations coming in from Ajit for this morning. With that, Ajit, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. It's always a pleasure chatting with you.
Same here, Nandita. Thank you.
Thank you. Well, with that, we've come to the end of this edition of Morning Trade. But before I go, let me remind our viewers 3 listings to watch out for, including the much-awaited Tata Tech IPO. And if grey market premium is anything to go by, it could see a blockbuster listing at a premium of somewhere around 70 to 75%. That's the expectations. Of course, we will find out at 10 a.m. Aside of that, there are 2 more listings to watch out for: Gandhar Oil and Fedbank Bank. So, 3 listings, lots of action on the street. Catch all the action on money control going forward as well, because I'm out of the studio. But coming up next is Opening Bell. Thanks a lot for tuning in from me and the entire team. Stay tuned.